Hello guys, so welcome back to our YouTube channel SYH Capital, and today's topic for the video is we're gonna analyze different markets, different countries, stock markets, and how they are performing after the war and during the war, and we'll see how how where we are in terms of Nifty if we compare to their outperformance and how they are doing, how we are doing, and we will do a comparative analysis of emerging markets, and we will also do a comparative analysis of developed economy like USA, Europe, and Japan, and how we are positioned in terms of if we compare ourselves to them. So we're gonna analyze this in this video. So there will be a lot of learning because I don't think so anyone covers this topic in the market, and this is very crucial because the fund flow is very important, in which direction it is moving, which country it is moving, and why it is moving. If you get to know that, you will know the exact macros and the exact set of macros needed before a country becomes a trillion-dollar company or a phenomenal growth company like India was in 1990s, or the USA was in early 1900s. So today we're gonna see on the charts how we can do so. So let's see. Let's start the video. I hope you can see my screen. So we're gonna start with FTSE. FTSE 100 is a UK indices. Okay, the top companies of UK is listed there. If you can see on the charts, the index was not done very great since 1990s 2000. It was in a sluggish market, and just after COVID, uh, they have done some kind of a retracement and then come back to the same levels. But after that, if you see the recently, they have started seeing inflows from March 2025. So from an index of 8,900, 9,000, the index is somewhere around 10,000. A decent return in the U, uh, UK market for last 1 year. It given 22%, which is okayish compared to what they were earlier giving. Right now, in terms of war news and correction from January till now, we can see they have retraced above 61% levels, but now coming back. So it doesn't show much of a strength, but but on a broader scale, it is doing fairly good in terms of sustaining the levels and in terms of strong pullback without any red candle. So this is UK market, which is doing pretty great. Coming to DAX, so this is an index of Germany. You can track it because Germany is also one of the major economies in terms of tech. In terms of technology, Germany is quite good, and as we know, Germany is famous for Ottoman education and lot other reasons as well. But coming back to the topic, so Germany is in a structural bull market for a very long time. If you can see the stock, the chart, the index is making higher high, higher lows on a daily time frame, weekly time frame. And what we can see, it's what you say, it's in a decent position. It has given a strong pullback. The retracement before the fall and after the fall is above 61. So index is doing better than the Europe. DAX is doing better than the Europe, which is quite good if you consider the overall market and the situation. And if you can see, it's a very decent kind of a pullback and then a correction, which is very healthy considering the markets and the geopolitical tension. Now DAX is doing good. CAC 40, it's a index of France. So if you can see on a monthly time frame, from 1980s they did phenomenally well till 2000s. when India was in a recession or kind of a bear market for 10 years, 1990 to 19, what do you say, 1990 to 2000, the India was in a very, what do you say, bear market phase, or you can say a correction phase. A lot of tech questioning was happening, and a lot of consolidation, and bad companies were, what do you say, uh, people are exiting out. And after the Harshit Mehta scam, a lot of retail investors are also, what do you say, are not very happy with the stock markets. That's why that time phase has come. A lot of structural change was also happening. The PLI scheme was there. So coming back to our France index CAC. So if in terms of retracement, though it hasn't corrected much, just a 1,000 point correction, and which is almost a 10% correction, which everyone has seen in this fall. And if we can see, it has corrected more than 50%, and it's trading above 61% retracement in the Fibonacci level. So the country, in terms of the price action, in terms of the setup overall on a technical scale, the France is also doing great, better than UK, but not better than Germany. Coming to Japan, if we come to Japan, which is Nikkei 225. So Japan was always a country which is known for their quality, their durability, their long-term reliability. Companies like Toyota, Lexus, Honda, Kawasaki, and these kind of companies are being originated from Japan. So if you talk about the markets, so they are not usually they were, what you say, are not have given not so much return. And if you come to the charts, so they have corrected quite a bit, but now trading at the same all-time high levels, and it is one of the strongest market in terms of retracement which has happened after the fall. So if you can see that, you will be surprised like how strong Japanese market is right now, and how good shape they are in terms of, what you say, in terms of pullback, in terms of strength on the charts. So Japanese market looks quite strong from here. So that's for the Japanese market. So till now, Japanese market is the best outperformer. Coming to our next Hang Seng, which is a Hong Kong based index. Okay. So coming to the monthly chart, on that level from 1980s with Japan and with other countries, they did very well in terms of returns. And since 2000, the country has not seen much of a reform. I think the country is in a, I don't know much history about them, but I think as far as I know, it's just a country for the trading purposes. They don't have a lot of moat. In Hong Kong, it's a travel, tour and travel based economy. And if you see, that can be seen in the chart as well, because it's highly depending on the, what you say, uh, highly depend on the tools and travels. And even after the COVID, with every market they also retrace, but again, because they were so scary phases, they have eventually fallen, and now they have started to recover since Feb of 2020. So it's 2 years past now. They also made a strong base. uh, I will rate not rate them very good in terms of corrections from the high to low. This war situation, they are not able to retrace 50%. They retraced, they got rejected from 61%. So it's an exact rejection from 61% levels. So it's not a outperforming market. It's no funds are flowing in this market right now. Hong Kong is a not very attractive place, I guess, for the investors. Coming to our country, Nifty. If we talk about Nifty on that levels, so on a weekly time frame, it is very decently placed. And if you consider uh, this fall, because India is a net importer of crude, and we are in a very tight situation because of this Trump and this war situation. So, as I mentioned in the weekly series as well, that we we can see a lot of correction from these levels. So this is the level which we have to look out for, and where a lot of selling can happen. So this is the level where a lot of selling pressure can be there. So we need to see Nifty as well. Nifty is not performing as it should be. So selling zone. This is the selling zone coming to Sensex, because why not Sensex? Sensex gives more accurate picture than Nifty, because Sensex contains only top 50 or top 30 companies, and Nifty contains top 50. So if talk about the retracement from the before the war, so Sensex has not even able to recover 50% from the levels. So if you can see, this is the very strong selling zone in terms of Sensex. It's in a selling zone itself. That is the major reason you have seen so much pain in the portfolio and all. So this is the one of the most important reason that the Sensex is not performing. Nifty is also not performing. Bank Nifty is doing quite great, but it just can't be that Bank Nifty is supporting and every other sector is falling. So it just compensates the effect. So now we're gonna come to the emerging markets. So we have talked about the developed economy. Now we'll talk about our favorite competition, which everyone knows is basically China. And coming to CSI 300, I don't think China's technically is any logic to see, because it's a very different kind of government. It's a very different kind of a country. They are far ahead in terms of everything, but I don't think they are seeing any kind of an inflows. And if you talk about the war situation, I don't think they have faced any issue. If you see from the top of the war started and down, China has corrected almost just 8%, while any other country has corrected more than 10%. So that shows how much strong they are in terms of the internals of the country. And if we talk about the previous swing high, which was what you say 21,000 in 2021, 5,500 in 2021, it's almost giving a 61% retracement per level. I think China will do exponentially well in coming few years. So China can see inflows. Even people are looking for China plus one theme, but I don't think so. I think it's more of a propaganda, because you cannot replace the capex which they have done, and the at the level which they have been executing things won't be possible. Let's also come to uh, another country which I don't think so you guys have idea about. It's Brazil. So Brazil is going at a very quite PDS way, almost like India. So index was around 1100 odds in 1995, and since then they have never seen any major corrections. They got into sideways consolidation, but it's a very mineral rich country, and I don't know. I don't have any idea. I just have some information that the country is not very good in terms of standard of living, but economy wise and from the stock market point of view, they have done phenomenally well. Whenever there's a recession or something, they go sideways, and after that, they outperform. So since 2025 June last year, almost 10 12 months back, from there, the indices has given just 50% return in the just a short period of time, short span of time. So you should have an idea that how much the stock have performed, which were inside the indices, because indices is an average. So internal component should be moving much more faster than that to be the average of 50%. So I think Brazil is a very quite developed economy, well, a developing economy which is doing phenomenally well in terms of inflows. Coming to Russia, Macau exchange. So everyone knows Putin how and what kind of personality he is. So very quite royal personality. He's a very tough guy. I'm a fan of him. But if you can see on the charts, again it's a very dominating country, and if you see the war hasn't have much impact. So if you can see from the Feb, they have corrected more than 36% from the top. So that is quite a lot. But if you consider they are in a war situation since 2020 with Ukraine, and there's so much angle to it, and their index has given corrected 64% at Ukraine time war. Now it has corrected 30% from the recent highs, and which is okay. But if you consider, somehow they are still trading at near all-time highs, like a 10-20% kind of a move can easily clear out the all-time high. So this shows how massive they are in terms of their execution excellence, in terms of their defense, and in terms of their army. That even after having been in war for 4 5 years, and it hasn't shaken the stock markets and economies. It has its short-term impacts, but in long term, the trend is up and it's quite good. Uh, so Russia looks very prominent and strong right now. Let's see how it goes for the future. Coming to FTC, which is UK 100, we have already discussed, I guess. Coming to okay, coming to Korea. So Korea is very interesting. If you guys can see, since the charts in 1990, 34 rupees point index has went all the way to 1000. It's a phenomenal journey for last many years since 2020. 2007 has happened, the Lehman crisis. Till that time, they are not doing very well, and now just after this, what you say, correction, they are started seeing a very good rally from that point of view. So the correction of COVID hit here, the fastest country to recover. So they just got recovered within a year almost. So the previous high was 300. They made a new high of 450, almost a 150% move, and then they got correction. Came back all the down. A lot of accumulation happened, and then there was a showstopper show where from 300 it has went to almost 1000. So it's a 3x return on the index for the South Korea, which is very phenomenal considering India is also in the place and there's a lot of competition in the emerging markets. But South Korea is doing exceptionally well, and if you can see, it's doing phenomenally well. Coming to our last index, which is Taiwan, and this is it. So they are the cash stocks from Taiwan, and you can see all the semiconductor company, all the tech company, the tech giants. They are the countries where they outsource their major part too. And if you can see from 2025, they are doing phenomenally well in terms of return. And they have haven't seen any major correction in the war kind of situation because there's so much tech boom, there's so much capex happening, and there's a lot of things happening around them. So it's at the all-time high. So we can see and we can rank and we can compare it with India. The data which I have showed to you guys. So Taiwan is the best one. Then there's Bospi. Then there's Pakistan is also doing great. South Korea is also doing phenomenally well. Coming to tax is doing phenomenally well. Japan is doing phenomenally well. Sensex and Nifty are getting some kind of a resistance from the investor point of view. I think they might be questioning the leadership, and they might be having a doubt on the political what is it, the geopolitical tension or the geopolitical landscape of India, which is very tricky for many FIIs. So from my point of view, that's all. So these are the countries which are doing. So there's a sector replication effect which is there. So if a stock has done good or a sector has done good in certain economy in a bull market, that is very high chance is gonna do well in your economy as well. So you can compare that, you can study that. I think this is a very long video. So that's it for this video, guys. I hope you like the video. Do subscribe to our channel SYH Capital, and also link down the pin down your ideas, your thoughts on the comment section, so that we can have more discussion and detailed discussion on how we can give more value to you guys. Thank you. That's it for this video. Have a nice day.